Welcome back. My name is Nigel Schroeter, and today we are here to talk about what is bad credit. What exactly is bad credit? A lot of us think that bad credit is a number. A lot of us think that bad credit is just depending on our FICO score and all these little small things. But bad credit is something that is way larger and way deeper. For us to understand what bad credit is, we have to understand what credit is to begin with. So let's talk about that really quickly. Before we get into that, though, please make sure that you hit that like button and share this video out to someone else. And please leave us a comment below and let us know how you like the information in this video. And if there's any information that you want to see in an upcoming video. Let's begin. So, credit. What is credit? Credit is your ability to borrow money. All right. Now, your credit score shows your management of borrowed money, right? How you have previously managed money that you've borrowed. So all your credit score is doing is telling banks, hey, he or she did or didn't pay back this person before. So this is just a warning to you as to whether or not we feel like you should lend to them. And then each bank has it up to their own discretion as to whether or not they want to approve you or not, or if they are going to approve you or not. So, once again, with credit being your ability to borrow money, what is bad credit? All right. Well, when we first look at your credit profile, the first thing you see is utilization. And payment history. That's because we want to know that you're going to pay us back, obviously. And we want to know that you're not using all the money that's available to you. So you're coming to us to borrow money to pay back someone else, or as they call it, robbing Peter to pay Paul. So those are the two main things that banks are worried about. Then they want to worry about, well, how long have you had credit? Are you currently, seeking credit or not? All these other little smaller caveats. So why do they want to know these things, and how are they going to determine? These are the ways that they're going to determine whether or not they're going to approve you, as well as your risk score, which we talked about in the last video. So what is bad credit? When a bank looks at your profile and they see that you're not properly using your credit, that's going to be your kicker for bad credit. So remember, it's not a score. There's not a specific score that is bad credit. It's the bank looking at your profile and saying, okay, we don't think we should loan to this person because they are not properly utilizing their credit, right? So then the next thing, if your credit is not creating you opportunity or income, right? So banks want to see that you're financing things that make sense. Are you financing a car? Is that car getting you from point A to point B and helping you pay your debts? If not, then that's a recreational vehicle, so the banks don't look at it as strongly. Are you financing a home? Is that home your safe haven, or is it an investment property? That's why homes rate so heavily, because you typically don't see homes that are just vacation properties, sitting there being mortgaged when there's not another home involved. So that's why you see so much weight given when you have a home on your score, because generally it's thought that if you have a home, you're using it for a viable reason. Now, the next thing, how do you know that you have bad credit? Is your credit limiting you from creating opportunities, from creating income, from being able to do the things that you want to do? Can you not get into an apartment? Can you not get certain jobs? Are there certain things that you're not able to do because you're of your credit? Then that's going to tell you that you have bad credit. Is your credit causing you stress because of these things? Do you stress when you look at your score? Do you stress when you look at your profile? If you do, then you may have bad credit. And lastly, when you present a lack of responsibility to the bank, that's going to be your main kicker for bad credit. So if you show the bank that you're not paying back other banks, you're using up a bunch of money and you're not paying it back quickly enough, and the things that you are financing are not impacting your life positively, that's when you're going to see the bank start to shut you down. So it's not a score, right? You can have a high 700 score and still have bad credit. You can have an 800 score and still have bad credit, because if it's not getting you approved for anything and it's not creating opportunity or income for you, it's not creating safety for you, then it's not good credit. With that being said, thank you all for watching. Thank you all for tuning in, and we'll see you guys in the next one.